Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. And the most interesting thing about this is that the bulls have an opportunity, if they can follow through, to trade consistently for the first time since January below the middle band on the daily chart, the middle band being the green line there. Since they lost the middle band back in early February, it has been a futures contract that has wanted to trade almost exclusively between the middle band and the upper band. That's typically very bullish, and we did nothing but rally. If you want to see the baseline presumption about the market shift from that of buying dips to selling rallies, the best way to make that happen is to get price below the middle band and keep it there. We saw on Thursday and on Friday a couple of significant bearish pushes down. We saw a bounce Friday afternoon. I always take that with a grain of salt. It's the end of the week. It's profit taking. It's who wants to hold over the weekend, who wants to be short over the weekend, which has been, just death as a strategy over the last few years. So I always wait to see what happens Sunday night into Monday morning. It's been a flat night. You've got a new monthly pivot sitting up there at 63.83. You've got a weekly pivot coming in this week in the 83.20 area, and the middle band is sitting at about 20.70. The bears want to take the easiest road they can, which is to establish the monthly pivot as resistance up at 64 and just take it down from there. No more challenges to the middle band and just push. The Bollinger bandwidth is still very tight. It's at 3.8. We could potentially end up on a lower band ride. Speaking of lower band rides, the NQ has been on a lower band ride for the last 6 days. So before you say, what are you talking about, Mike? We need a lower band ride? NQ's already there. Okay? I think that has a lot more to do with earnings than anything else. The Russell, on the other hand, is just starting to get the middle band involved, and the middle band again acted as support, as it has in both the Russell and ES since back in early February. So what we like to say in the chat room is somebody's lying. We just don't know who's lying yet, because you've got some very, very different looks on the indexes right now. You've got the NASDAQ that has gone and touched its third standard deviation lower band. You've got the ES that is battling with the bears winning the battle on Friday over the middle band, and you have the Russell that is just business as usual, but doing the same thing that everything's been doing the last couple of months, which is holding the middle band as support. So this is going to be a very interesting next couple of days. If the ES bears can take control and break the lows from Friday and push down into the lower band, I think by default the Russell's going to have to come with it. If the Russell is what we're going to end up doing, then you're going to see Friday probably be the pullback low. And if we get through monthly pivot at 64, through middle band at 70, and then head up to the weekly pivot at 83 and get through there, then I think that's going to, that'll lift the sinking boat that is the NASDAQ, and we'll move along. But right now is a dangerous time. So trade what's in front of you. Use stops. Don't get super committed. These indexes aren't committed one way or the other. They're all over the place. So there's no sense in you being committed one way or the other either. This is not a time to load up with some type of multi-day ideology. It's no good. Just take it one trade at a time until this thing figures out what it actually wants to do. Because right now it has no clue. All right. Everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.